For over 15 years, financial experts have warned that Bitcoin is a worthless bubble. But they were wrong. Bitcoin is the best money ever invented, protecting your life savings and turning ordinary people into millionaires. So in this video, I'm going to expose the biggest lies they told about Bitcoin so you can resist the haters, build your conviction, and get fabulously wealthy with Bitcoin. Now, how could I be right and the CEO of America's biggest bank, Jamie Dimon, be wrong? If anyone should understand money and finance, it's him, right? Well, if we compare the performance of one of JP Morgan's top investment products to the regular stock index funds over the last 5 years, we discover something shocking. Where the S&P 500 and Nasdaq hit average returns of 14 and 17% per year respectively, JP Morgan's large cap growth fund did 17%, not even beating the Nasdaq after fees. However, Bitcoin had a yearly return of 62%, almost 4 times higher. Thanks to Bitcoin, I was able to quit my job and focus on Bitcoin education. My wife's able to stay at home with the kids, and we don't worry about inflation or our financial future. Now, if you would like to increase your financial freedom just like me, just click the link in the description below. Now, let's watch together as Jamie Dimon shares his thoughts on Bitcoin.
So on the Bitcoin, there's, first of all, and I'm not trying to make a joke here. There are use cases, fraud, anti-money laundering, tax avoidance, sex trafficking. Those are real use cases, and you see it being used for hundreds, maybe 50 or $100 billion a year for that. That is the end use case.
Jamie Dimon says that Bitcoin is only good for criminals. But this is actually true. Bitcoin is completely transparent and transactions can be easily traced. It makes no sense for criminals to use it when cash hides their activity better. And we have the studies to back this up. Bitcoin represents less than 0.1% of all the money laundered worldwide. Cash is king for criminals. Oops, we caught Jamie Dimon red-handed fudging the facts. What's ironic is that JP Morgan, Dimon's own bank, has been caught for 281 violations since 2000, racking up over $40 billion in fines for market manipulation, fraud and abuse. That makes Dimon a hypocrite and he can't be trusted. Now, let's look at a few more of his comments, just for fun.
I think there's a good chance that when we get to that 20 million Bitcoins,
they'll go to 42.
No, that Satoshi's going to come on there, laugh hysterically, go quiet, all Bitcoin's going to be erased.
I think, man.
How the hell do you know it's going to stop at 21?
This is a really strange moment. For the first time ever, Bitcoin enables you to protect your savings from the inflation caused by money printing, guaranteeing there can never be more than 21 million Bitcoin. And anyone can verify this in Bitcoin's code. Dimon knows this. Don't be fooled. He's a very smart man. You don't just become CEO of the biggest bank in America if you're dumb. So what's he doing here? It really seems like he's straight up gaslighting us about Bitcoin's most important feature, basically trying to deflect the conversation. What I think is going on here is Dimon doesn't like Bitcoin because he can't control it. If Bitcoin becomes widely adopted, banks like JP Morgan can no longer profit just by inflating the money supply and charging fees, threatening their business model. In that world, financial institutions will have to become a much smaller part of the economy and actually add value. That's why Jamie Dimon doesn't want to talk about Bitcoin, because he's afraid of it.
I don't care. So just please stop talking about this shit.
Now, the demand for Bitcoin is so big that Jamie Dimon recently surrendered during an annual investor day, reluctantly announcing that his bank will finally offer its clients access to Bitcoin investments. So who's laughing now, Jamie? Alright, let's move on to our next expert. This is Warren Buffett, one of the most famous investors in the world. As CEO of Berkshire Hathaway, Buffett is famous for his value investing strategy. He likes to invest in companies that generate reliable income. Whenever he would find productive companies that are strongly undervalued by the market, he would buy himself a big position and hold it for a really long time, collecting the income to accumulate his fortune. And this is how Warren Buffett amassed an estimated net worth of over $160 billion, making him one of the richest men in the world. Let's see what this financial mastermind thinks about Bitcoin.
Now, if you told me you owned all of the Bitcoin in the world and you offered it to me for $25, I wouldn't take it because what would I do with it? I have to sell it back to you one way or another. I mean, maybe I have the same people. It isn't going to do anything. The apartments are going to produce rental, and the farms are going to produce food. That explains the difference between productive assets and something that depends on the next guy paying you more than the last guy got.
Warren Buffett is correct. Bitcoin is not a productive asset that generates income. You can't fuel your car with it, you can't eat it, and you certainly can't live in it. And because Bitcoin doesn't produce anything, Buffett appeals to the greater fool's theory. He makes the case that only fools would buy Bitcoin, hoping they can find an even bigger fool that'll pay more for it so they can make a profit. He's basically implying that Bitcoin is a pyramid scheme. So, is Buffett right? Are Bitcoiners just trying to pump up the market so they can make a quick profit? Or is there something else going on? Well, if you own some gold, you know it doesn't produce anything, but it can still hold value. For thousands of years, gold has maintained its value. In ancient Egypt and Rome, a 1-ounce gold coin bought a quality set of clothes or a month of food. And after thousands of years, a 1-ounce gold coin now costs over $3,000, still buying you a fine suit or a month of groceries. People own gold because it stores value. It gives them the certainty that when they produce value in the economy, they can store that value for when they need it in the future, without depending on anybody else. Gold's scarcity, durability, and universal demand used to make it the best store of value. Now, I don't see gold as an investment because it doesn't go up in value. When an ounce of gold increases in dollar terms, it's actually because the dollar is losing value due to inflation. On the other hand, Bitcoin is increasing in value because of its growing adoption. Every day, more people around the world recognize Bitcoin's superiority to other stores of value like gold, and this will continue for decades. While the total gold supply will keep increasing, Bitcoin has absolute scarcity with a 21 million supply limit that will never be changed. Bitcoin is also more secure, easier to recognize, cheaper to store, and can be sent around the world instantly and almost for free. In a global digital economy, Bitcoin is therefore set to utterly destroy gold. Now, if you want to understand the problems threatening the financial system and why Bitcoin is the only solution, access my free video course by clicking the link in the description below. Let's switch to Warren Buffett once more.
And you can come up with all kinds of things. We can put up Berkshire coins, or we can put up Berkshire money or anything like that. But in the end, this is the only thing that's money. And anybody that thinks the United States is going to change the way they let Berkshire money replace theirs is out of their mind.
Buffett says the US government won't allow Bitcoin to be used as money. Now, there are two reasons why Buffett is completely wrong. First, Bitcoin is designed to resist government crackdowns. Remember how peer-to-peer file-sharing networks never disappeared after years of attempts to ban it? Well, China, India, Turkey, and Nigeria have all tried to outlaw Bitcoin, but because Bitcoin is decentralized, the usage never dropped, and those same bans got lifted. Bitcoin 1, government 0. Second, Bitcoin isn't getting banned by the US government. On the contrary, there's a wave of institutional adoption. Ever since BlackRock announced its Bitcoin ETF in 2023, we're seeing record inflows in Bitcoin ETFs. Tremendous growth in Bitcoin treasury companies and the launch of a Bitcoin strategic reserve, set to accumulate 1 million Bitcoin. Yes, Buffett is right to say the dollar will stay the leading currency, but Bitcoin is rapidly becoming an important part of the financial system, proving its ability to solve the fiat dollar debt problem. Someone who doesn't agree with that at all is our next expert. So let's listen to Peter Schiff.
Well, Bitcoin has a lot of problems. I mean, the only problem Bitcoin would solve is if you have too much money and you want to lose some, you could buy Bitcoin and that will solve your problem.
Peter Schiff is a well-known financial commentator and founder of Schiff Gold. He's an outspoken critic of the fiat monetary system, and he successfully predicted the 2008 financial crisis. Now, Peter Schiff is definitely a financial expert. So what's his problem with Bitcoin?
Bitcoin is replicating all of the properties of gold, except the most important one, and that's the metal itself, the element, the rare, scarce element that has been valued as a commodity for thousands of years. And it's not just the fact that gold is in jewelry right? That's the most important use. But gold is in all the cell phones that we have. They use it in aerospace. And so there's real value there.
Peter Schiff argues that the industrial demand for gold, such as in jewelry, aerospace, and dentistry, creates a price floor that gives people the confidence to use it as a store of value. Since Bitcoin is only designed as digital money with no other uses, Schiff says Bitcoin cannot be a store of value. Let's watch some more.
There is nothing you can do with your Bitcoin. That is the point on the lack of intrinsic value. If I don't have somebody who wants it, there is absolutely no actual demand for it. But apart from the fact that it can be utilized in transaction, it's nothing. It has no real value into itself as a commodity. There's no way to relate the price of Bitcoin to the price of anything else.
Hereby, I'd like to nominate Peter Schiff for a gold medal in denial, since he's been wrong about Bitcoin since its early days, consistently predicting its demise as it climbed from pennies to $100,000. During the 15 years of Bitcoin's price history, the price was cut in half no less than 8 times. And there were also many more 20 to 40% crashes. If Schiff were right, Bitcoin would have already plummeted to zero. But with every price drop, long-term believers in Bitcoin step in to buy up the available supply, setting the price floor higher and higher. Clearly, people don't care that they can't wear Bitcoin around their neck or fill their teeth with it. They want it for its limited supply, its security, and all the other things that make it better than gold. And every time they risk their capital to scoop up cheap Bitcoin, they stabilize the price, which gives even more people the confidence to put their savings in Bitcoin too. Peter Schiff thinks goods have intrinsic value, but what he fails to see is that value is always subjective. A bottle of water isn't worth the same in a desert as it is next to a lake. And even then, the water bottle only has value if there's someone that wants it. So Schiff is wrong, and intrinsic value is just a stupid concept. By now, Schiff's stubbornness has cost him and his followers billions, much more than he makes selling gold. And he's even admitted to regret not buying Bitcoin when he first heard about it in 2010. What Schiff doesn't realize though is that ordinary people are still turning into Bitcoin millionaires. And if you would like to know how, I reveal the simple strategy they use in this video here.